Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramanian.
Good afternoon. I'm Ira Dugal. Let's get straight to the headlines. Good corporate earnings take Indian markets to record highs ahead of the union budget.
The IMF warns world leaders of complacency even as it raises global growth target in 2018 to a 7-year high.
Donald Trump slaps import tariffs on solar panels and washing machines, triggering protests from Asian countries like South Korea.
Prime Minister Modi will be the inaugural speaker at the World Economic Forum, which kicks off in Davos later today.
And BJP's oldest alliance partner Shiv Sena says it's going to fight the 2019 Assembly and Lok Sabha elections on its own.
Let's start on how the markets are faring. Neeraj is here as always. The momentum is continuing. This is expiry week, but no stopping good news.
and how the momentum is continuing and how. So really good going there. Yesterday people are skeptical about whether we'll nudge 11,000 and come off. I think we are now safely showing that we're not going to come off, at least from the looks of things, though. You never know what could happen. But commodities are leading the charge today, Asha. Yeah. And quite unlike what happened yesterday, heavyweights aren't participating. So the Reliances and the TCS and the HDFC banks of the world are not top draw today. It's essentially what's happening to commodities. To an extent, certain stocks like Axis, etc., yes, but Vedanta, Tata Steel, Hindalco, those are the clutch of names that are moving up in the session today. Absence of some large losers is also helping the cause, but the bigwigs, the top 4 or 5 heavyweights are not piling on the gains today, so different set of stocks completely. It's continuing at the broader end of the spectrum too. So while the Nifty bank is off today, at the broader end of the spectrum too, you will see how the commodity names have contributed. JSPL is the top gainer on the BSE 500, doing very, very well. Nifty metal up 4.5%, JSPL is up about 10%, and certain other metal names, Godari Power and Ispat and a couple of others, managements that we interviewed as well, are up about 4-5% in trade. Last but not the least, some themes that are moving up. Hotel stocks, by and large, off and on, we've been talking about them in today's session too, right from Indian hotels to the bike hospitality, Viceroy, Kamath, etc., Taj GVK, that entire clutch of names seems to be doing really, really well. So do watch out for this space in particular, and watch out for some key numbers that will come out during the course of the day as well. A couple of consumer durables names have come in. Watching out for some key names coming out a bit later on in the show as well, or rather on the day as well.
All right, that's the structure of the markets today. Jayesh Khilnani standing by with the main contributors to the rally to 11,000 and on the Sensex as well. The fastest 1,000-point gain, Jayesh?
No, not really, Ira. So
no?
1,000 points have been achieved in 183 days. We've had instances where the Nifty has scaled 1,000 points in lesser number of days. But you know, like I was telling you, 25th July, the Nifty hit 10,000 for the first time. And since then, it's been 183 sessions. And while this is, for the Nifty, the Sensex actually has taken only 4 sessions to go from 35 to 36,000 points, that is. So, you know, from 25th July, Nifty has gained nearly 10 to 11%. But how have the other indices done? Let's have a look at that. So, you know, this chart shows you the Nifty versus the mid cap and the small cap index, which actually shows that the Nifty has, underperformed both of them. So the white line is the Nifty, which is just about 11%. The blue line is the Nifty mid cap index, which is nearly 18%. And, the purple line, which is the Nifty small cap index, that has gained as much as 21% from when the Nifty hit 10,000. And you know how the other sectoral indices have performed. Let's have a look at that as well. So you have the likes of Nifty Metal, which has gained as much as 30%, and you have Nifty Real Estate Index, which is the blue line, which is just above 25%, and you have Nifty IT, which has been the surprise performer in this rally, gaining as much as 21%. So we also had a look at how individual stocks have contributed to the 1,000-point Nifty rally. So if you have a look at that, there are 3 stocks in all which have given more than 100 points contribution each, that is. So Reliance being the leader of them, nearly 159 points that has contributed, followed by M&M and HDFC Bank. We also have other stocks like Maruti, which has given you contributed as much as 87 points, Indiabulls Housing Finance 57, and HDFC Limited contributing about 53 points to the 1,000-point rally. Then we had the likes of HUL, Bharti Airtel, L&T and Tata Steel contributing anywhere from 35 to 48 points for the rally of 1,000 points that we've seen for the Nifty.
Jay, thank you for that. A word of caution though from Tahir Badshah of Invesco Mutual Fund while nothing seems to be spoiling the market sentiment right now, he says investors should not lose sight of risks in this rally. Listen in.
Clearly, markets are responding to the eventual recovery and a much awaited expectation of earnings recovery, which has been kind of expected for the last 2 years, is now kind of coming about, and that's one source of excitement besides some of the other factors, like of course liquidity resumption now even from the FIIs, because they have started to kind of become positive now for the last 1 month. So I think fundamentally, as well as to some bit from a funds flow standpoint, the markets are doing what they're doing. But broadly, I think this is a level of the market where one can't lose sight of risk. And risk control increasingly now from here on will become an important consideration, not just in terms of incremental deployment of capital, but even in terms of what product you select. So ours is not an intention to say that one should stay away from the markets, but basically I think one has to be relatively more particular about the kind of product that you use. So I think some bit of risk control measures in terms of being much more valuation cognizant, probably looking at certain companies and or maybe funds which are positioned on a value style, or those which are probably a little more value conscious would make better sense for investors. So that's probably the message that we can probably convey at this stage. Hard to say as to how much more the market might head. We are in the midst of the result season. We are also confronted with one in a reasonably important event, if at all, the budget. So I think we need to see as to what comes out of all those things. But broadly, I think that is our key message, that we need to now increasingly not lose sight of risk and risk control.
All right, of course, equity markets being supported by strong global growth. The International Monetary Fund has projected that the global economy will grow faster than expected this year and next year. US corporate tax cuts provide a short-term boost to an already strong global economy. In its latest World Economic Outlook report, the IMF upgraded its global growth forecast by 0.2 percentage points to 3.9% for both 2018 and 2019. That would be the strongest expansion seen in the global economy since 2011. The IMF has upgraded growth forecast for every country in the G7, that's the group of 7 nations, except for the United Kingdom. In Asia, the IMF has left India's growth forecast unchanged at 7.4% for both 2018 and 2019. China is expected to grow at 6.6% in 2018 and 6.4% in 2019. Detailing the outlook for the year, the IMF, however, struck a cautious note. They talked about the fact that the risks to global growth forecasts are broadly balanced. The near term, they remain skewed, though, towards the downside over the medium term. On the upside, the cyclical rebound could prove stronger in the near term as the pickup in activity and easier financial conditions reinforce each other. On the downside, and this is key, the IMF says that rich asset valuations and very compressed term premiums raise the possibility of a financial market correction, which could dampen growth and confidence. In talking about the term premium, if we can bring up the chart of the US yield curve, the IMF is pointing to that one indicator which all market watchers are watching, which is how flat the US yield curve is. The absence of the term premium and perhaps the indication given by a flat yield curve that growth will not be strong in the future is what we are watching out for. Christine Lagarde, the IMF's managing director, addressed the press after that World Economic Outlook was released. Let's hear out what she had to say.
Global growth has been accelerating since 2016, and all signs point to a continuous strengthening of that growth this year in 2018 and next year in 2019. This is clearly mostly a cyclical recovery. And absent continuous reforms, the fundamental forces that had us so much worried about this new mediocre that we feared, in other words, the scars from the crisis, the low productivity, the aging population, and on, and future potential growth, all of that will continue to weigh on medium-term prospects. Third reason why we should not be entirely satisfied, there are uncertainty in the year ahead. The long period of low interest rates has led to a build-up of potentially serious financial sector vulnerability. And we are seeing a troubling increase in debt across many countries, and we need to remain watchful. Global growth has been accelerating since 2016, and all signs point to a continuous strengthening of that growth this year in 2018 and next year in 2019. Growth, in our view, needs to be more inclusive, not only across country, which has occurred over the course of the last few decades, but within countries. And some areas of focus, in our view, require training for workers that are displaced or at risk of being displaced by new technologies and globalization.
It was Christine Lagarde. Well, he's about to complete a year at the helm of Tata Sons. N. Chandrasekaran says he's faced no friction or interference from other board members, including Ratan Tata. Chandra, who took over from Cyrus Smith III's rather unceremonious exit, says that he has the freedom to consult any director he wishes, and he's not bound to adhere to any set rule. On the sidelines of the World Economic Forum at Davos, Menaka spoke to Chandra and he's listed out some of his key priority areas within the Tata Group. Listen in.
You're watching Bloomberg Quint. We're coming to you from Davos, and this is our debut interview here in Davos. And no better way to start it with Chandra of the Tata Group. Chandra, it's been a crazy snowy day in Davos. Is that what your first year at the Tata Group has been like? A little snowed under? You finished, a year at the end of Feb?
No, not yet finished 1 year. 21st of February, I'll complete 1 year. It has been a good year, I would say. I think we've been able to do a number of things. On the group itself, we have focused on building talent, and we have tried to address core issues. We put the DOCOMO behind, and we also have divested our Tata Tele services to Bharti, and we moved on steel with our joint venture with Thyssen Group, and all these transactions are going through at this point in time. We have also removed a lot of cross-holding, and we have rolled out a strategic agenda in terms of how to simplify the group, how to consolidate the group, and how we can bring specific focus in terms of certain key verticals like retail, consumer, like financial services. So there's a lot of work to do, but it's been a satisfying year.
Okay. I know we're pressed for time. You have a lot of things here to do in Davos, so I'll make it quick and I'll ask you one question about each of the specific aspects of the group that we were hoping for updates for. Very aggressive capital raise at Tata Steel. $2 billion is what you're looking to do. You've already said that some of that will go towards acquisition of stressed assets. How long do you think it will take for Tata Steel to regain #1 position, which you lost to JSW Steel a few years ago, and which now seems like it could take a decade unless you do some very aggressive bidding in the stressed asset scene?
I think it is not about being #1 or #2. I think Tata Steel has a great future. Once this European issues behind, there will be a significant focus in the domestic market. We have already announced an investment of 25,000 crores for the expansion at Kalinganagar. We are looking at the stressed assets, and let's see what the outcome is going to be. But we have stated our intent that we are committed to the Tata Steel business. We see tremendous opportunities. You shouldn't be surprised if we are doubling our capacity from the current 13 million tons.
In how much time is the question, and will most of that then be inorganic besides the Kalinganagar expansion? Because greenfield at this point in time doesn't seem to be the route that most large steel companies are taking.
So I think, let me not put let you not put words into my mouth, but at the end of the day, our intent is to grow. There is a great opportunity, but it does not mean that we are racing to be this or to be that. I think as long as it makes sense, we will do inorganic.
So what will you be looking for? Mostly pricing, because I'm just curious. A lot of analysts believe that the move up in the commodity cycle doesn't justify inorganic.
You should leave it when I say that we're interested in the stress assets. We're looking at it. The process is on. It's not fair for me to say anything more.
Okay, Tata Motors, its key competitor was telling us in an interview on record just a few weeks ago that they've never seen this kind of deep discounting take place in the commercial vehicles business in a very, very long time. That too is a battle to regain your, lost or big margin of market share. What's the goal there? How quickly do you hope to achieve it?
So as far as commercial vehicles in Tata Motors is concerned, I'm extremely happy with where we are. The progress we have made this year has been excellent. I come from running a company where we were industry leading in terms of revenues, industry leading in terms of margins and profits. So you know my thinking. I don't sacrifice one for the other. We're pretty sensible about building our business, and let's wait.
Okay, you said digital and retail, digital retail and financial services were the things that will preoccupy most of your agenda from here on. What can we expect in 2018 on retail? I mean, the Tata Group's tried a variety of things. For instance, I remember many months ago I went for the Tata Click launch, and it just seemed like a little bit too little, too late. So are those things that you intend to revamp?
So I think the way to look at our agenda is by themes. I said the themes are going to be simplification, synergy and scale, and that will play out in every segment. Okay, simplification will mean sometimes removing cross-holding, sometimes consolidating entities, sometimes getting out of some entities. So it could be any one of those things. But the major verticals are 6 or 7. We will play these themes across each of these verticals. So I can't sit here and tell you what exactly we'll do in retail, because there are multiple companies and the strategy has to be formed which makes sense for those companies, which makes sense for the shareholders. So it's a lot of detailed work. So it's not a
you're not giving away much right here.
Obviously, I'm not going to give you
financial services, Chandra. Financial services. Again, is that an acquisition route?
No, I think we will do organically. Okay. If you really look at financial services, we are one of the finest brands, and both our insurance business as well as the NBFC business has got a huge opportunity to grow.
Then why not choose the inorganic route at this time, given that you want to scale up as fast as you can?
I think, these are decisions that we will look at in each of those company strategies, and I can't really tell you that we're going to buy this or buy that. But just looking at that space, even organically, there is a very big opportunity. So we will do that, and at any point in time, if there is a big opportunity presents itself, then you look at it. Because inorganic growth is not something that you say that tomorrow I have to buy somebody. That's not the way it works.
What are you hoping to hear from Prime Minister Modi here in Davos?
I think last 3 years of the Prime Minister Modi has been one of significant amount of reforms. And most of those reforms are very structural, and I believe that all those reforms will play out, and we are going to see significant pickup in growth rate in later part of 18 is my assessment. We are already seeing a lot of green shoots, whether it is in commercial vehicles or in our consumer spaces, whether it is high-end consumer.
So you believe the economy is on recovery mode?
I think so. I think it's going to be in the pickup mode going forward, and I would expect the Prime Minister to express his deep commitment towards the path of reforms and path of long-term growth and transparency, all the things that he has been championing over the last 3 years. I expect that he'll reinforce so that people can participate in the India growth story, which is going to be the biggest growth story for the next 10-20 years anywhere in the world.
I have have one last question for you. It's a question I've been wanting to ask you for almost a year, 8 months maybe, since you last did what was your first interview with the Fortune magazine. And in that you said, and this is a question that sort of encapsulates, maybe some parts of what your year has been like. Whilst you've been working to bring together many parts of the Tata Group and modernize them, you've also had on the side the entire Tata mystery battle go on. That's part one. Part two, there is, all these questions that have been raised about, Mr. Ratan Tata's involvement in the day-to-day affairs of the business, how the trusts, associate themselves with the day-to-day affairs. And you said something that struck me as very interesting in that interview which you did with Fortune, where you're asked about all of this, and you said, if you're asking me if I feel like I have as much power as any other CEO, the answer is yes. But it's a process. It's not like I can get up in the morning and say, hey, I want to exit financial services. There's a discussion. I just want to know, where does all of this stand now? How would you describe the working relationship? How would you describe the overhang of that court case? And how would you describe how concerned you are about the succession at the Tata Trusts?
I think in terms of how I feel in my seat, I think I feel fully empowered. I think it's a great platform. It's a phenomenal opportunity to make an impact to the Tata Group and as well as to the larger society and all the things that go with it, being at the helm of Tata Group. Obviously, that brings a lot of responsibility. Because what you decide can affect so many people and so many things. So you need to consult people. You need to carry the board, and usually how you run as a professional, how you run a large enterprise. So I feel pretty excited. It has been a great year.
No friction.
No friction at all. And in fact, practically, if I have to answer your question, I would say no interference at all.
Okay.
It's a question of I wanting to reach out to anyone. Sometimes you feel that a particular board member has knowledge about a particular area, you call that board member. If I have to reach out Mr. R&T for a particular area because I feel that his view will be critical, then I'll reach out. So apart from that, I think it's been a fantastic experience.
All right. 1 year down, many more to go, Chandra.
Thank you.
Thank you very much for your time here in Davos. Have a good stay.
All right, lots more coming up from Davos later today. Let's move on. India's battle against pollution has left Indian Oil Corporation searching for alternative markets to sell petroleum coke. Remember, the cheapest and dirtiest of oil products has been banned in many parts of northern India. Devjit Chakrabarti of Bloomberg News joining us. Devjit, what is their game plan for this?
Yeah, with the news tightening on pet coke over emission issues, Indian Oil, one of the key producers of the fuel, is now facing a lot of problem in selling or finding customers within the country, especially in the northern parts where they have two refineries which produces pet coke. The company is now looking at pushing the dirty fuel to further away markets like southern India or eastern India, or even exports, incurring a higher freight on the fuel. This again will increase the cost of the fuel, and they may have to absorb some portion of it. We have seen that in the past 2 months, Indian Oil was forced to cut the price of pet coke to move its inventories or attract consumers for using this fuel.
Devjit, we'll leave it there. Thank you so much, Anil, for joining us. That's the story on IOC. Let's move on now. Donald Trump has finally moved on his promise of protecting American businesses. The president has approved a proposal that imposes stiff import duties on certain products like solar power panels and washing machines. Foreign-made solar equipment will now attract an import duty of as much as 30%. The new tariff imposed on washing machines are even higher, triggering protests from countries like South Korea and China. The Ministry of Commerce in Beijing has issued a strongly worded statement calling it a misuse of trade measures.
All right, we'll slip into a quick break. On the other side, budget is just about a week, 10 days away. What are the markets watching out for? Anil Ahuja of IPEplus Advisors joins us.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Days away from the union budget, and there is perceivable nervousness in the markets, at least in the bond markets here. Apart from that, a number of other issues. What happens to growth? Does the government need to support the rural economy? Here to speak to us about all of that and give us some perspective.
Government will do some political things as long as they are not 20% or 30%. If they are restricted to something like 5-10% of the budget, that is acceptable. That's nothing unusual.
Government is sticking firmly to its fiscal consolidation path. We've already discussed the rationale for that. And if it announces that it'll, go to 3%, that would be great. I mean, I'd love to see that.
It's a very delicate year, and any kind of fiscal adventurism during this period might not be very palatable. Inflation is going up, the twin deficits are widening, with the current account deficit widening as well. So it's a year to be conservative rather than profligate.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. Good corporate earnings take Indian markets to record highs ahead of the union budget.
The International Monetary Fund warns world leaders of complacency even as it raises global growth target in 2018 to a 7-year high.
And Prime Minister Narendra Modi will be the inaugural speaker at the World Economic Forum, which kicks off in Davos later today.
Quick check on how the markets are faring. You're seeing momentum continue in the markets today across the board. Pradeep is here with some of the key movers in the last half hour, particularly the commodity plays.
Yeah, so commodity segment which is kind of driving the stock market. So there is not that much bullishness in commodity segment per se. Commodities have benefited a bit, yesterday in Europe and this morning in Asia because of some weakness in dollar. But I think the equity market per se is bullish, and that is what is driving the commodity prices or the commodity stock prices higher. In fact, market probably is kind of discounting, the impact of higher global growth on commodities, and that is what is really playing in traders' mind. But that's not the only segment. Look at the heavyweights like RIL or Infosys. So support is coming in from across segments, and even if you look at some of the mid-cap names or certain sectors, so you have GNFC doing quite well, continues to do quite well. You have entire aviation pack moving up with the kind of numbers that have come out, and 17 to 18% kind of a growth that this entire industry has seen. So today, what is really happening is that index has moved up, and therefore the heavyweights are doing well. Traders are the short traders are forced to square off some of the positions, so that has also helped. But somewhere, if you speak to brokers or traders, they are kind of hedging their bets, and they know that we are very close to a big event that is budget. And somewhere in everybody's mind, there is some doubt that maybe government will spend more, and that could have an impact, an immediate reaction in the market. So people are hedging, and that's why VIX is moving up. I think now what brokers are really advising is that you should rather be in option than futures. Let's see how much the clients are really willing to listen to them, because expiry is also approaching, but I'm talking about the next month's option. So that is the same advice coming in, but I don't know how many takers are there actually in this market.
Thanks, Pradeep, for that. All right, let's shift focus into our special segment on what the markets expect from the budget this time around. Markets have been scaling one record after the other, rising oil prices, widening trade balance, growth concerns, and a slower than expected earnings recovery. This is the overall environment, but nothing has been able to spoil the party so far. As we enter or near budget 2018, what are the markets watching out for? Will a slippage from the fiscal consolidation path or a possible return of long-term capital gains tax trigger a correction? To discuss this and more, Anil Ahuja, Chief Investment Officer at IPEplus Advisors and Asia Star Funds, joins us. Anil, thank you so much for joining us on Bloomberg Quint. Appreciate your time for us. What are your broad macro expectations of budget 2018? What are you expecting the finance minister to do this time around?
So thanks for having me. The first thing I'm going to say is I think the finance minister and the government is extremely aware that the capital market or the success or the continued momentum of the capital market is extremely important for the Indian economy and for the government itself. So I think they're not going to do anything to spoil what we can only call a party right now. They need this capital to keep flowing in. They need to be able to tap into this capital for the requirements of the government. I don't think they will do anything to disturb this. That's at an overall level. So I don't think anything that you think could happen which is negative. I think they're going to be very, very careful not to do it. On the budget, I think the first thing is on fiscal deficit. We've seen two things this year. One was with the announcement that 50,000 would be reduced to 20,000 crores, which was the borrowing number for this quarter. And the second was the ONGC announcement. Now, both these indicate that fiscal discipline is somewhere pretty high up in the agenda of the finance minister. So I would not be surprised if they surprise us by staying with the original plans, staying with the 3.2% for this year and the 3% for next year. And I don't know how or what levers they will pull, but try and make sure that they do not slip by much if they do at all.
Anil, good afternoon. Ira joining the conversation. On that first point about the long-term capitals gain, totally take your point that they probably don't want to spoil this party, as you said. There was a conversation which one of my colleagues was having with the top CFOs, and there's a balance to be maintained. There was that promise of a headline corporate tax cut that the finance minister has made. He hasn't delivered in it for large corporations. If he is to want to stick to that promise, perhaps the only way to balance out the revenue impact would be through taxing capital gains more. Do you see any merit in that argument?
So I don't actually. I don't think taxing capital gains, which could be a big negative for the stock market, will be in their interest, because remember, the only way to make these numbers meet is for next year to have an even larger divestment program. 50,000 crores is easy, maybe even 100,000 crore kind of number. In which case they need the capital market to remain buoyant. The banks need to be sorted out, so they need the capital markets to remain buoyant. There is 15,000 crores a month flowing into the equity market every month from domestic flows. If that turns around, there is a big problem. We're talking about a problem where there will be no buyer on the other side. You will only have sellers. So that 15,000 crores, which is give or take 200,000 crores. That can be tapped, So I think their mood to do anything to disturb the current euphoria in the capital market would be ill-advised.
One of the areas.
But again,
go ahead.
Sorry,
please.
on the issue of the 25% indicated income tax rate for large corporates or for corporate India. I don't think they need to do it right now. I think the country is running fine without it. They can push it by a year. So I'm not expecting it to happen, but if they do it, they'll do a 1% or something, but then they'll take away something else. So I don't expect the counterbalance for that to be coming from the capital gains on the equity market.
One of the areas of concern, Anil, that we've been speaking for the last couple of years is the private sector investment. Fixed capital formation hasn't been as robust as one would have anticipated. You are seeing some green shoots there. Do you expect the government to perhaps offer some incentives for corporates to go ahead and start spending?
I think they could, because it is clear an issue and it is clearly been discussed and mentioned often. But my concern is that even that incentive is not going to start, a big flurry of investment by corporate India. I don't think that is real. I think a large part of corporate India has become a trader in mindset. So, they just buy from one place and sell to another place. I don't think they're a manufacturer anymore. I think that has been a big issue with corporate India over the last 5 years.
That's a very important point, Anil. Do you think that the only way to correct that is perhaps to see a much stronger demand scenario? Now, a lot of people are saying that demand scenario can be induced by sort of, pushing the rural economy. I'm not sure that's the right way to do it, but would you anticipate that the government would be tempted to try something like that?
So let's also not forget that you've got an election coming up next year. So we have to be aware that there will be political agendas at play in this budget. So I expect, a Manrega number to go through the roof. I expect agri SOPs. I expect rural SOPs. I expect housing SOPs, whether the interest breaks, whatever they are. But all those elements to be in play in this budget. Again, roads and railways. Absolutely another big area where there will be a play. But good thing is a lot of these can actually turbocharge the consumption side of the story, which basically means that the vast population that we have beyond the so-called middle class can be triggered to start spending and therefore increase demand. But I still don't believe that demand will translate into this massive amount of capital expenditure by corporate India.
What do you think, Anil, that the finance minister should stay away from?
Oh, lots of stuff. Stay away from materially expanding the fiscal deficit. I think he should stay away from anything to do with taxation on capital gains, on any hickory pockery there, juggling 1 year to 2 years, this, that, and the other. I think they should stay away from stuff which is obvious populist stuff, because that'll be seen incorrectly. What they can do is to essentially accelerate their own spending and generate income in the hands of the people, but to do bigger dole outs, I think those will be a problem. So I think do it in a subtle manner, but it will happen. I mean, I have no doubt in my mind that this is going to be a budget which will set the government up for the election next year. And not to mention 8 state elections this year.
Absolutely. Anil, a thought from you on how this whole GST story has played out from what you've read and, the various tinkering on rates and procedures that the GST Council has been doing. Are you disappointed, or do you think this could have been planned better, or is this inevitable because it's a large indirect tax change, complicated country, etc.? Does something need to be done in terms of signaling there to make the process easier?
I think it had to be done. I mean, the GST had to be done. That's a given. I think compliance is still an issue. Anecdotally, I've had even post the GST regime, I've had while shopping in Delhi and here and there, you see people are asking for X% extra if you want to blah blah blah. So you see this happening all the time. So it's not as it has been full or complete or anywhere near that. I think the bigger issue is the impact that it has had on not so much the SME, but the level below that. So I think there is a consolidation towards the large, but the small has obviously been impacted negatively. So I think the small business, the mom and pop store, all those people have been negatively impacted by the GST, and I don't know how that could have been sorted out or what the solution is. But I think we're going to have to feel our way through it. It's not easy to try and dive into something as big as this and not expect to continue to make changes and meander through this process.
I have just one final question. Sorry, we've got you on a slightly bad line. 2017 was clearly the year where domestic money sort of propelled this market. Do you expect 2018 to see the foreign guys returning? Would India feature in their portfolios, in their scheme of things at all? And could the budget be the trigger? Does it need to be the trigger?
I would not hang my hat on the foreign capital because please remember, India is very, very, very expensive compared to other markets. We can keep spinning the growth story, but that doesn't actually hold water when you do a hard number comparison. I mean, if you compared the India, we're the only country which actually right now is, taking multiples of 2020 March based on 20% growth for the next year and the year after that. That is all, a pie in the sky kind of stuff. So if you did fair comparison on a PE basis, we're probably 20-25% more expensive than the US. On a price to book, we are more expensive than the US. We are, given our interest, our risk-free rate is 7.5 and their risk-free rate is 2.5. There's no logic in saying that our interest rates are coming down, therefore our PE needs to be going up. So that logic or that argument is rubbish. Our earnings growth, index level earnings growth is less than that of the US, at least currently. The US has a tax cut. They have money coming back. They have big buybacks going on, all kinds of other stuff. And this I'm comparing with the US, which is the most expensive developed market out there. You start looking at the others, you see big differences. You start comparing it with other emerging markets, the differential goes up to 33%. So I think we're an expensive market. The domestic capital has been absolutely fabulous for the market, but I would not be betting very strongly on large amounts of international capital, which has options to be flooding its way back into India.
We'll leave it there. Thank you so much, Anil, for your time. Thanks for stopping by with your views. Anil Ahuja from IPEplus Advisors talking about the market's valuations and what he expects from Budget 2018.
All right, and these conversations continue through the week here on Power Lunch. But let's get back to Davos. Lots of interesting commentary coming in from there. Global markets and the economy will continue the upward momentum if they are, quote-unquote, left on their own. That's the word coming in from Nariman Bhairavesh, Chief Economist at IHS Markit. But what does he mean by that? Listen into this conversation between Nariman and Menka Doshi.
It is a Davos of many firsts. It's also the first time that we're entering the year and attending the World Economic Forum's annual meeting on such an upbeat note for the global economy. Nariman Bhairavesh, a well-known economist at IHS Markit, has characterized it as a left-to-its-own-devices economy. You want to talk to us more about that, Dr. Bhairavesh?
Sure. The very good news is compared with a year ago, the momentum of growth is stronger, and very importantly, it's broad-based. It's not just the U.S. that's doing well or Germany, but it's all of Europe, and it's Japan and some of the emerging world as well. I mean, India always does well, but Brazil and Russia is doing better. So what we're saying is that left its own devices, this economy has momentum enough to go at least another year or two. Now, what do I mean by left its own devices? If there's no policy mistakes, I'm talking here about Trump's protectionist sort of tendencies, or if the Chinese somehow or other mismanage their deleveraging, which they're trying to do, or if central banks somehow or other get spooked about inflation and step on the brakes too hard. If none of these happen, I think these are all fairly low probability kind of scenarios, but if this doesn't happen, we've got a good shot at going another year or two.
You missed one, Dr. Bhairavesh. Crude oil prices. They're back up at 70. They took a very quick time to get there. And now people are talking, quite frequently about crude oil prices hitting $100 as well.
Yeah.
How much of a negative is that?
It's a negative, but I don't think we're going to get to 100, very simply because the U.S. production is already starting to rise again, and I think that will compensate for what we're seeing. But yeah, it's risen. At these levels, 70 is not seriously damaging to the global economy. 100 would be, but I think it's very unlikely we'll get there, precisely because there'll be more production.
You started off by saying that this strong growth period could last for a year or two. Why just a year or two?
Well, I think what I worry about is eventually we'll start to see inflationary pressures building up and a lot of the imbalances that tend to take place toward the end of a cycle. I mean, this has been a long cycle. It's a slow cycle, but a long one. And so that, I'm not willing to say another 3 or 4 years because, the risks start to increase as we get further out.
Okay. This is the year we start seeing the Fed starting to contract its balance sheet. We also have a new Fed chief. The ECB, of course, is much further back in that curve.
That's right.
And the BOE hasn't started talking about it as yet, neither has the Bank of Japan. Do you think by the end of the year we'll see some more convergence between the global central banks?
I think 2019 is probably the convergence year. I'm guessing the ECB will wait. Bank of Japan certainly will wait. And Bank of England as well, especially because of Brexit uncertainty. So I would say 2019 is the convergence year.
Okay, we have a wealth of global leaders here in Davos this week. Prime Minister Modi kickstarts the event tomorrow, and then we've got Emmanuel Macron, we've got Justin Trudeau, Theresa May, Angela Merkel, and then maybe even Donald Trump if the U.S. government shutdown doesn't keep him back home.
Exactly.
What are you hoping to hear from all of these global leaders?
Well, what I'm hoping is how to say this, an emphasis on cooperation, an emphasis on working together rather than against one another. And the worry here, of course, is Mr. Trump, who's said some very unfriendly things about Canada, about Mexico, about China. But that's the hope, is that the whole spirit will be one of cooperation, one of coordination. And I'll listen very carefully to what they have to say.
We'll leave it there. Thank you very much. That's just the point we've been making as well. A plethora of global leaders here at the WEF's annual meeting 2018. Let's see if they all speak a shared common language. Nariman Bhairavesh, thank you for your time.
Thank you.
And enjoy the rest of Davos.
You too.
And stay out of the snow.
Yeah, there you go.
Snowy Davos there, but there's more. Prime Minister's much-awaited speech at Davos happens later today. Menaka spoke to a bunch of members of India Inc. and asked them what they expected from the speech. Listen in.
We are all looking forward to what Mr. Modi is. Yeah. So it's a great event. I've been coming here for many years, and this is the first time that we are having Mr. Modi, Prime Minister of India. So we are very excited, looking forward to what he has to say.
What must he talk about?
Well, I'm sure he's going to talk about India and how India is becoming a very important economic power in the world, and why everybody should come and invest in India. The demographic dividend and the population, everything is in short supply. So, India is a great country. So I'm sure he's going to sell India like anything.
The progress that India has made over the last few years is pretty well documented and well known. What my expectation is that he would talk about India 2020 or India 2030, because really people don't live in past. People live because you share your vision. So if you were to say what I would like to hear, it is 2030, it is 2020, India vision, India mission.
Okay.
And who better than Prime Minister Modi to share that?
You see, there are two clear things according to me. One, of course, there's a lot of reform that has taken place and taking place in India. We know that by the time these reforms translate on the ground, it takes time. So that's something that I think he should continue to talk about, what his roadmap is for the next couple of years, and let's say even after FY19. Second important thing, in which India has not done much of, but what he has done a lot in the last 3 years, is projecting India as a large player, a player that can be there for the world, a player that should put forth its own views for the world. And I don't know whether he's going to talk about that, but I hope he does.
Yeah, he's in a focus in the World Economy Forum in the Davos. And this is the time we have to position and project country's brand image very, very strongly.
and to highlight the truth of the realities. Because there is a lots of perception or impact and other thing is there. I think a great country to invest is this moment compared to all other nations. I think that's the takeaway for today's evening.
No, it's about Make in India.
Okay.
And then all the reforms and the continuity of reforms in India as a growth story.
He's going to set the agenda for India in the global sphere. I think he's going to attract investments. He's going to showcase how we're doing in India in a variety of industries. But I think the key is going to be about jobs and manufacturing.
All right, Prime Minister Modi may be in Davos, but he'll need to keep an eye out on what's happening back home. The BJP's oldest alliance partner, Shiv Sena, says it's going to fight the 2019 Assembly and Lok Sabha elections on its own. Meanwhile, Aditya Thackeray has been named member of Shiv Sena's national executive. Sena President Uddhav Thackeray took a vow saying that they will fight elections in every state for the cause of Hindutva.
Okay, out of time on the show. Thank you so much for joining us today.
Countdown is up next.